Hey Puppy Trades, I wanted to do a video analysis update on our implied volatility study that we had done earlier in December, where we looked at Workhorse and we predicted that a large move was coming. And we also reviewed how the bar chart straddle and strangle index did a very good job of showing us a list of stocks that were ready to break out of consolidation. They were ready to go from contraction to expansion. They were ready to go from low implied volatility to high implied volatility, which means they were ready to go from low option premiums to high option premiums. Okay, so what is a straddle? What is a strangle? A straddle and a strangle are when stocks have such low implied volatility because they've been consolidating sideways and destroying beta for so long that premiums are so cheap that a trader theoretically could buy a call and a put and expect to profit from the movement of the stock, the movement of the implied volatility going from low to high without ever guessing which way the stock was going to go. Okay, so all this screener does technically is show us stocks with very low implied volatility, very cheap options, and consolidation that has come to an end. Okay, this is really important because most option traders fail not because they don't know the direction of a stock's movement, but because they can't time when a stock is going to break out of consolidation and go from low implied volatility to high implied volatility and from low option premiums to high option premiums. Another really cool thing about this is if you think about it, when is the smart money buying options? By definition, the smart money is buying options when option premiums are the cheapest, okay? When is retail least likely to be interested in a stock? When a stock's been moving sideways for a very long time, okay? When stocks aren't exciting anymore. So this is, one thing that this is really cool about is that this will show you stocks that have been consolidating for a very long time. There's not going to be any retail interest in these. If you think about it, this is when option premiums are going to be the cheapest. This is when stocks are going to go from not moving a lot. The low implied volatility will hit a trough, and then we're going to go from low movement to high movement, from low premium to high premiums. Okay, so let's get right into it. We had a picture of the bar chart straddle and strangle screener from October 29th. We saw that Lacacia Holdings, Tesla, Amarin, Boeing, Pivotal Investment Corp, Citibank, Micron, Intel, Boeing, Red Rock Resorts, Boeing, Tesla, and Tesla were on the screener on October 29th. Long story short, every single one of these stocks had a huge movement from October 29th to the upside, okay? This is Micron. This is Citibank, or this is Micron right here. This is Citibank, had a large move to the upside. This is Lacacia Holdings, had a large move to the upside. This is Pivotal Investment Corp, had a large move to the upside. And this is Tesla, where it had a large move to the upside after it appeared on this screener. Okay, so we started putting this theory to test, and I actually started putting this theory to test with my own money. Okay, I bought a call on Nikola on December 24th after I saw that Nikola appeared on this screener. So that told me that Nikola had really cheap premiums, and I was looking for a selling climax after it appeared on this screener. So Nikola appeared on the screener. It dropped from 17 to 13.80. I was looking for blood in the streets. I was looking for us to go from low implied volatility to high implied volatility, low movement to high movement, low premiums to high premiums. It worked out very well for me. Actually, it was pretty cool that a few days before, Nikola actually showed up on this screener on Monday or Tuesday, and then the next day they announced an agreement with the Arizona Public Service Commission, had a large move higher, and I cashed out a 330% return. Another example very recently was that Intel appeared on the screener, and I was looking for a dip. So at 47.07, I bought a call, the February 19th, 55 call. A few days later, Intel announced a whole new product line. And then, when I cashed out the call, it was on a headline that their CEO was actually stepping down. So both of those headlines are completely unpredictable. Okay, but what I think is really interesting is what a lot of you guys made some money on, and that's Beyond Meat. Okay, so Beyond Meat, no one should have made money on this because this is not investment advice. I'm just showing you guys a screener that I use. This will not replace all technical analysis. I'm showing you guys a screener that I use to find stocks with low premiums that are ready for large movements. Okay, the whole idea is that traders generally are really good at knowing which way a stock is going to move. They're not very good at timing when a stock is going to break out of consolidation. Okay, so what this screener will do, it will show you stocks that are ready for large moves. The cool thing that we found from all of our data collection is that when stocks appear on these screeners with super low implied volatility, they have a little selling climax. They have what the Wyckofians, the Richard Wyckoff students will call a springboard selling climax, where the last retail longs are shaken out of their margin accounts, and then they have a large move to the upside. Okay, so this was really cool. We actually had two sources, iVolatility, iVolatility.com said Beyond Meat was in the bottom 5% of its implied volatility range. So the high of the 1 year implied volatility range for Beyond Meat was 129%. The low was 50%, and the current implied volatility was 54%. That meant implied volatility for Beyond Meat was in its bottom 5% range. It meant options were basically as cheap as they've been from a relative basis all year, and that Beyond Meat was due for a massive move, a swing from low implied volatility to high implied volatility. We used Elliott wave theory to confirm that was going to be to the upside. Okay, we also had another source, the bar chart Straddle. This is the bar chart Strangle Screener, said, hey, options on Beyond Meat are so cheap, you have a 54% chance of making a profit if you buy a call and a put. Right? So the only way that a strangle or a straddle is going to work is if implied volatility is so low and option premiums are so cheap, a trader can make money on the movement of the implied volatility without actually guessing the direction of the stock price's movement. So we had two sources right here telling us, hey, Beyond Meat has extremely low implied volatility. And then, of course, we also had, wow, a 37% short float, right? I mean, these are masochists. I don't know who in the right mind opens a short position on a stock like Tesla or Bitcoin or Beyond Meat. Interesting risk reward ratio there, because short positions can lose infinitely more money than invested. And these people have 3.3 days to cover, and Beyond Meat just gapped. Anyway, enough on that. We also had Elliott wave theory telling us, hey, this large movement that the options market is telling us is coming looks like it's going to be to the upside. We have a 1-2, 1-2. If 113 holds at the low, Beyond Meat's going to fly to 263 in 5 to 6 months. I'm standing by that price target. I'm in the driver's seat. Everyone's in the driver's seat. Stop loss below break even. Let that ride. Okay. So if we look at Beyond Meat right now, I thought this was really interesting. It shows up, and this was on January 8th. I said a massive move was coming for Beyond Meat. And then a few days later, Beyond Meat announced a partnership with Taco Bell and had a massive move. In 2 days, it went from 118 to 142. And I thought that was really interesting because right before this, someone said, hey, the problem is that analysts keep cutting it. So isn't that a little interesting? All of the analysts were saying, hey, Beyond Meat is not a buy, but the options market was saying, hey, premiums are super cheap. So just another really cool example about how a lot of times the fundamental story can be very misleading to retail traders, before it's too late. So we did see that this large, massive move was coming in Beyond Meat that bar chart said was coming because implied volatility was extremely low. And then implied volatility.com said was coming because implied volatility statistically was in the bottom 5% of its 1 year range for Beyond Meat. Okay, so let's look at a few more examples how we can really use this in practice. Okay, this is tonight's bar chart Strangle Screener. Okay, let's just look at this screener. I've gotten asked a few questions. How do you pick? Look at all these stocks. How do you pick? Spoiler alert, I like all of them, but how do you really pick? How do I really pick which one I'm gonna do? Okay, well, I was saying birds of a feather flock together. Okay, and that's not poetry. That's because stocks are traded in exchange traded funds. They're traded in ETFs. Okay, so that means that stocks are invested in as a group. So it's not a coincidence that the Strangle Screener for tonight is saying that Boeing, Carnival Cruise Lines, United Airlines, Norwegian Cruise Lines, Delta Airlines, Carnival Cruise Lines again, Norwegian Airlines, and United Airlines, and Carnival Cruise Lines. Those are all cruise lines. Those are all airlines. They're all travel and leisure stocks. Okay? Birds of a feather flock together. So let's look at two stocks off this list. So, to answer the question that I get, how do you pick? Well, I really like to see stocks in a group, right? Lowe's and Home Depot were on this together. Surprise, surprise, they're basically the same company, okay? And all the oil stocks were on this together. Right now, we're seeing all the cruise lines and all the airlines are on this together. So look out, the travel and leisure sector is going to have a large move. The technical analysis says it's clearly to the upside, okay? So think about that when you're reading the bearish wave counts tonight. But let's look at United Airlines. I really like this setup. I've been all over this, so I'm not quite sure I would enter it now, but we're going to talk about how I was able to basically, predict that there's going to be a large move to the upside and what to kind of do once you see that a stock is on this screener, okay? So if I look at this chart right now, we have a very clear wave one from the low and A, B, C correction puts in our wave two. Then we consolidate sideways for a very long time. And if we connect this high with this low and this high, we have really clear reactions on the median of this pitchfork where the low of these candles is reaching the median of this pitchfork. And then we see the median of the pitchfork acts as a magnet. And now we're seeing that we had a buying opportunity off the lower bound of the pitchfork. That actually was a buying opportunity. And now we're expecting that United Airlines will go to the median of this pitchfork. So from an Elliott wave theory perspective, if we see United Airlines actually broke above this high from June already. Okay, so from an Elliott wave theory standpoint, that means that United Airlines is what we call incomplete to the upside. Okay, it's incomplete because whether this is a wave one, a wave two, or a wave three, or a wave A, a wave B, and a wave C, wave three / possibly wave C is at least the length of wave one / wave A. Okay, what am I saying? Okay, let's take away these numbers for a little bit. What if you were a super bear and you were saying, oh, puppy trades, your wave count's wrong. This is a wave A, this is a wave B, and this is a wave C. Well, congratulations, it's still incomplete to the upside because wave C is at least the length of wave A. So whether you're a super bear or a super bull, that United Airlines is incomplete to the upside because wave C or wave 3 is at least the length of wave 1 / wave A. Okay, so if we take the length of this move in time and price and we place it at this low, then we know once United Airlines breaks above this high, that this is an incomplete bullish sequence. United Airlines, from an Elliott wave perspective, has to go to at least the length of wave A / wave 1 placed at the wave 2 / wave B low, okay? We also have, from our classical trading perspective, is that from this low, United Airlines goes on a 4 to 6 week run, well, 5 weeks. It goes on a 5-week run. It forms a bull flag with declining volume, confirming bullish consolidation, and then it presents a buying opportunity off the lower bound of this pitchfork. And we see that if we take the length of the bull flag in time and price, and we place it at this low, so we'll say right now, the invalidation level for this projection is 41. If this low of 41 holds, then United Airlines has a bull flag equal legs target of 60. Lo and behold, that's also the minimum target for our wave 3 / wave C. Okay? So remember, I actually don't think that it's a A, B, C. I think that this is a 1, 2, 3. What I'm trying to say is that even if you thought this was a wave C, we know it's incomplete to the upside, okay? So I think this is 1. We go A, B, C, put in our wave 2 low, and then once we broke above the high of wave 1, we knew that we were incomplete to the upside because no matter how you count it, wave 3 / wave C is at least the length of wave 1. So we know from an Elliott wave perspective, we are incomplete to the upside until United Airlines reaches 59. Let's just call it 60. Because if we look at the bull flag equal legs target from this low, and we place it at this low of 41, we see that the bull flag equal legs target is 60. What a coincidence. The wave 3 equal legs target, minimum target, is also 60. So we are expecting that United Airlines is going to go from the lower bound of this pitchfork to the median of this pitchfork. I expect that this will happen in the next 5 weeks. Okay, so the next 5 weeks, 4 to 6 weeks, I would say, is my time range. I'm, very much expecting United Airlines will go all the way to 60, so long as 41 holds as the low. Okay, let's look at another travel and leisure stock that appeared with United Airlines. Carnival Cruise Lines also appeared with United Airlines. Basically the same song in the second verse. Okay, birds of a feather, they flock together. So, it's not surprising that we're each seeing these have a wave 1 and A, B, C correction. And if we take okay, that was fun. If we take the beginning of wave 1 and we connect it with the high of wave 1 and the low of wave 2, then we will see that Carnival Cruise Lines is incomplete to the upside, and it also, just like United Airlines, has a bull flag target, where if we take the length of the first leg of the bull flag, which is the 4 to 6 week run, and we place it at this low, so long as 19 holds at the low, that's a pretty tight stop loss. Let's say 17.33 will be our invalidation. The stop loss for this trade will be 19 theoretically. Obviously, this is not investment advice. But if we take the length of wave 1 in time and price, and we place it at the wave 2 low, and we also take the length of the bull flag in time and price, and we place it at the bull flag low, we have a very similar target range where, from an Elliott wave perspective, Carnival Cruise Lines is incomplete until it reaches 29. And from a bull flag perspective, we take the length of this move in time and price, we place it at this low. We believe that Carnival Cruise Lines has a bull flag equal legs target of 31. So if we take the low of wave 1 connected with the high of wave 1 and the low of wave 2, then we see reactions on the median of this pitchfork, and we are expecting that we are going to go back to the median of this pitchfork. We believe that wave 1, A, B, C, wave 2 will give us our minimum wave 3 target, right? Because remember, even if you count this as a wave A and a wave B, the wave C minimum target is at least the length of wave A. But we believe that this is a wave 1, an A, B, C correction wave 2, and then wave 3 is at least the length of wave 1. So we take the length of this move and we place it at the wave 2 low. That gives us our minimum target for wave 3, which is 29. And if we take the length of this bull flag in time and price, when we place it at this low of 19, that gives us a minimum target of 31. Okay, so if 19 is the theoretical stop loss, 17.46 is the invalidation. If those levels hold, I expect Carnival Cruise Lines will go the length of this bull flag in time and price, placed at this low, and we are going to see Carnival Cruise Lines reach 31 and the median of this pitchfork in the next 4 to 6 weeks. We're expecting United Airlines, Boeing, Delta Airlines, Carnival Cruise Lines, Norwegian Cruise Lines, all these birds of a feather are going to flock together. We have our bull flag leg 1. We have our declining volume confirming bullish consolidation. And we take the length of leg 1 in time and price and we place it at this low, then we are expecting that 31 will be reached in the next 4 to 6 weeks. Okay, 2 other stocks that showed up on this screener together are Visa and Mastercard. So we know birds of a feather flock together, and Visa and Mastercard have shown up on this screener together, and they have basically identical setups. So we're going to go over these 2 setups as well. Visa completes an ABC correction. I believe that this is a bull flag from this low, and that Visa and Mastercard have a twin trade. We're going to look at Mastercard too and see that it's basically the exact same setup, but we have a bull flag for Visa. And I believe what's happened is that Visa and Mastercard together have broken out and back tested this bull flag. Okay, so Visa and Mastercard have an A, B, C correction together. A, B, they have an A, B, C correction. So we have our wave A, our wave B, and then our wave C is at least the length of wave A. And once it's reached, we know that was the end of the correction, and we broke above the high of wave A and confirmed that this is all a completed ABC correction. We're expecting more upside. So we take this major low, we connect it with the high of wave A and the low of wave C, and we have a very beautiful Andrews pitchfork, okay? We have really clean reactions on the median of this pitchfork. We've already seen that this median is proven to act as a magnet, okay? So what does that mean? That means as soon as this low is in place, immediately Visa went to the median of this pitchfork, it consolidated sideways into a bull flag, and now it is presenting a buying opportunity off the lower bound of this pitchfork. So the pitchfork, the idea is that you buy off the lower bound and you target the median once you have a confirmed pitchfork, okay? Why do I say that this is a confirmed pitchfork? It's because when you take the length, when you take the beginning of this low connected with the beginning of wave A and the low of wave C, we have really clean reactions on the median of the pitchfork, and now we're being presented with a buying opportunity off the lower bound. We're going to go over Mastercard and see this is the exact same setup. Birds of a feather flock together. We have our A, B, C correction. We have our reactions on the median. We consolidate sideways into a bull flag. I believe we've broken out and back tested this bull flag, and Visa is being presenting right now an opportunity to buy off the lower bound of this pitchfork. So we'll say that if 195 holds as the low, we are expecting that Visa has broken out of this bull flag, and it is now presenting a second entry opportunity on the back test of this bull flag, which is also off the lower bound of the pitchfork. So we take this low, we connect it with the high of wave A and the low of wave C. We have really nice reactions on the median of the pitchfork. It immediately proved to act as a magnet and resistance. We consolidate sideways into a bull flag. We have declining volume confirming bullish consolidation. And today we had a breakout and back test of the bull flag, a second buying opportunity off the lower bound of the pitchfork. I believe that even without any of this, that we could reliably expect Visa will go from the lower bound of this pitchfork to the median of the pitchfork. We have a completed ABC correction, which is confirmed to be complete because we've broken above this high. And now we're going to go the length of this move in time and price placed at this low. I believe that by the end of February, Visa is going to go the length of this move in time and price placed at this low. That's going to take Visa to 240. That's going to take Visa from the lower bound of the pitchfork to the median of the pitchfork. We have really nice reactions on the median of this pitchfork, and this is really beautiful that we've already seen the median immediately act as a magnet. We have our classic bull flag with declining volume confirming bullish consolidation. Now we're being presented with a buying opportunity off the lower bound of the pitchfork. We are going to target the median of the pitchfork. We're going to target the length of this bull flag in time and price placed at this low. I believe that by the end of February, we are going to see Visa reach 240, okay? So birds of a feather flock together. Visa and Mastercard showed up on this screener together. We look at Mastercard right now, surprise, surprise, it's literally the exact same setup, okay? We take this low, we connect it with this high of wave A and the low of wave C, and immediately the median acted as a magnet. We formed a bull flag with declining volume confirming bullish consolidation. We went A, B, C, and Visa's already broken above this high. So Visa, as Mastercard's sister, has confirmed that this is a completed ABC correction. We are consolidating sideways into a bull flag. We had declining volume confirming bullish consolidation, and now we have a beautiful pitchfork by taking the low from the March low, connecting with the high of wave A and the low of wave C. We have reactions on the median of the pitchfork, and then boom, the median of the pitchfork immediately acted as a magnet. It also acted as resistance. We consolidated sideways into a bull flag with declining volume confirming bullish consolidation. We believe that if this low for Mastercard holds, then Mastercard will go the length of the first leg of the bull flag in time and price placed at this low. So we are expecting that Mastercard will reach 400 by the end of February, so long as 310 holds as the low.